Sahab, how are you?
Assalamu alaikum. Assalamu alaikum Alina. Assalamu alaikum Danial. Assalamu alaikum Zina. क्या हाल है आपके?
हम ठीक हैं. We're just really excited. We're अभी just figuring out the live streaming on Facebook.
I think we're live, or it said so.
We are live, yes.
Good. Good, fun. Is Dr. Baki here as well? Yet?
Would you also like it recorded?
Yes, please. I think we should.
Cool. Yeah, I'm gonna switch it back to you now, Alina, and then
that'll make you pause. That's fine.
Ji, assalamu alaikum. Can you hear me, Alina?
Yes, I can hear perfectly well.
Daniel, how are you? Assalamu alaikum. Murza Saab, kya haal hai ji?
Assalamu alaikum ji, bilkul theek. Thank you.
Good to see everybody.
So I'm just going to start admitting people in, if that's fine, and then we can start at 2 p.m. if that's all right.
Yeah, cool. Alina, you need to click record.
Okay. Yes. Good. Right. Thank you so much for joining us, by the way. We'll just wait for a few more participants to come in before we formally begin, if that's all right.
Sure, sounds good, Zina. Thank you.
Yeah. Thank you so much for coming. It's, I believe 7 p.m. in Pakistan right now.
Yes, just 2 minutes to the hour.
Yes. All right. How have you been, Murtaza Saab? How has February been for you?
It's going very well so far, Alina. It's never a dull moment in Pakistan. A lot of exciting things happening.
This is true.
And we're also trying to do a lot of things at the State Bank. So we're very busy, but busy in a very good way. I hope February's been good for you and the other students on this call as well.
Yeah, we've actually had a little bit of snow recently, so it's been fun. You know, so, I believe you went to you were at Oxford as well at some point.
Yes, many years ago. I'm still mesmerized by Oxford. I left in 2004, so after my DPhil.
I see. And what college were you at?
I was at Nuffield.
Oh, that's a really it's really central as well. It's a very beautiful college.
Correct. And where are you at, Alina?
I'm at Balliol.
Okay.
And
do you have a sense of whether the most of the people on this call kind of are studying economics, or I'm just trying to think of what level we should try to pitch this at?
Oh, I think it's definitely a mix.
Okay.
But I wouldn't say it's a majority of economic students. I think it's a lot of interests. Yeah.
Yeah, Salam. I think it would be good to have it mid to low level, because I think the majority of people would not have done econ.
Okay, sure. Mid to lower level at Oxford is still a very high level. So
true. Yeah, well, I'm a PPE, so we can
try not to keep it too technical. Sure.
No, I think the general discussion is more centered around sort of like the political economy and things like that. So it should be fine. All right, I think
looking forward to it. Thank you.
2 p.m. So we should begin, if that's fine. Assalamualaikum, Dr. Bakir. All right, so I'd just like to, on behalf of everyone, welcome Dr. Murtaza Saeed and Dr. Raza Bakir. Dr. Bakir is the governor of the State Bank of Pakistan and has additionally held a variety of roles within the IMF, where he worked for 18 years, and the World Bank. Dr. Murtaza Saeed has also worked with the IMF previously, and in variety of positions and is the Deputy Governor of the State Bank. And we're very grateful on behalf of the entire Pakistan Committee to have you here with us. I think before we begin, would both of you like to give us a little introduction into maybe your personal experiences with the IMF and other roles you've held, as well as the State Bank?
Thank you, Alina. Thank you, Alina. Assalamu alaikum. It's a real great pleasure to be with yourself as well as your other fellow students at Oxford. I think it was not too long ago. It doesn't feel like too long ago when I myself was in a position like yours and your other fellow students who are joining us today. I will just speak very briefly by way of background that you requested that I joined the State Bank in May of 2019, about a year and 9 months ago. And until that time, I had been working for a number of years at the IMF and had most recently held the position of a senior resident representative, or what simply you can think of as the head of the IMF office in Cairo, Egypt, when I decided to quit the IMF job and come back and to serve the country. And that was a time when our country was in the midst of an economic crisis. Our reserves were falling, were very low. We had large foreign exchange liabilities. We had a very large fiscal deficit. The IMF was on our back. And a lot of necessary but painful decisions had been delayed. And so we had to get together, really hunker down and come up with a reform program, as well as get the support of the IMF. But what I want to tell you maybe a bit more about, maybe by way of introduction, is that the first hiring decision that I made was to hire Dr. Murtaza Syed as a deputy governor, who is with us today. And it gives me great pride that we could have somebody of the caliber of Dr. Murtaza, especially an Oxford graduate, to be a deputy governor of the State Bank. And I think he is the youngest deputy governor, as well as maybe, I think, the only deputy governor with a PhD from Oxford. So I want to send a message out to everybody else who is on the call today that if you are remotely interested in central banking, serving the country, you have one of your alumni who is at the State Bank. And so in a brazen pitch for recruitment, I'll say that if any of you are interested, please do contact us. We are hiring with Dr. Murtaza, with our other two deputy governors. We are doing several things which are new, which have never been done in the history of the State Bank. And we are excited about the changes that we are bringing. And we are very, very keen to recruit top talent as well. So Oxford, has top talent in the world, and we'd be very excited if any of you are interested. So I have been here for the past year and 9 months. It's feels like a much longer time because of COVID, because of everything that the country went through. And I'm sure we'll have more occasion to talk about it in the course of the discussion today. Thank you, Alina.
Thank you very much. Dr. Syed, would you like to say a few words as well?
Sure. Thank you very much, Alina, and hello to everyone on the call. It's indeed a great pleasure to be back and talking to the very illustrious student body at Oxford. As you heard at the beginning, and the governor also said, I was at Oxford, it seems like many moons ago now. I left it in 2004. I was there for 5 years. I did an MPhil and then a DPhil in economics from Nuffield College. But I have some very happy memories of my time in Oxford, both academically as well as on a personal level, because both my children were born while I was in Oxford. And I know the Radcliffe Hospital quite well because I made many visits there while my children were born. And I can just thinking back on my time in Oxford, I mean, it was such an amazingly fertile time in terms of thinking about new things, getting exposed to new ideas, meeting people from all over the world. And some of the interactions that I had there really, I think, left a deep impression on me and wanted me and and motivated me to go back to Pakistan later on in my life. I met some very, very fine people that were in the civil service in Pakistan who were coming and spending some time in Oxford and were very, very motivated about going back. So I always had this at the back of my mind that it would be very nice if one day I could go back also and try and do something for the country. I left Oxford in 2004. I then went to work for the IMF, where I spent 16 years. Learned a lot there. Again, an amazing environment in which to learn about economics, to learn about real world issues, learn about the different experiences of different countries. And I studied in particular the Asian region quite closely. And I was also posted as the deputy res rep in Beijing for 4 years, just like the governor was the senior res rep in Cairo for a little while. Then in 2020, I got a call from my old friend and mentor in many ways, Raza Bakir, the governor. And he encouraged me to take a dive and put my inhibitions away and try to make a plan to come back to Pakistan and work for the State Bank. I have to say that it was a decision that was not a particularly easy one to make because one is always afraid when one is doing well in one's career, and then having to start all over again, go back to a country where, of course, one's heart always resides, but one is always wary of the politics in Pakistan and how easy it would be to go back. But I think in many ways, the governor, having had a very successful, I think about a year into his job at the time when he called me, made it much easier for me as well, because here was a person who was having a fantastic career in the IMF. I mean, would have gone on to the very highest levels very, very quickly, was having a meteoric rise. The fact that he gave all of that up and came to Pakistan and was navigating the landscape quite well, and would be this cushion between me as the deputy and sort of high level politics, gave me a lot of confidence. And I was very happy to take that plunge. I haven't regretted it for even one moment. It's been a bit of a baptism of fire because a month into the job, we were hit by COVID and an already very difficult situation that Pakistan was just coming out of, the deepest economic crisis that Pakistan had had because of the reserve situation that the governor alluded to, but also because for the first time, our public debt situation had become quite worrying. We were just beginning to come out of that, a very painful adjustment period, and then we were hit by this shock, the deepest global shock since World War II. But I have to say that I felt like I grew a lot during that period. I had to, together with this wonderful team that we have in the State Bank, we had to think of things we had never thought of before. And we had to try to navigate a path out of COVID. And I'm very happy to tell you that we've been very successful in terms of managing the economy through that shock. And I think it's a story that deserves to be told more widely, even outside Pakistan. It's a story that I think has many successes. And we're happy to get into that maybe through this call. So I came here about a year ago. I brought my family as well. And I have to say that the message, as the governor said, is that if there are people on this call who are thinking about coming back, this is probably the right time. You've got an economic team in Pakistan that wants to do great things, that is highly qualified. The governor himself has degrees from the world's best universities in the US. This is the right time to come back. If you want to do something for your country, please think about the State Bank. We are very happy to hire you. If you put your hand up, we have different kinds of ways of bringing you in. Please think about the State Bank. There comes a time in your life, I think, when you have to make that decision. Is it all about money, or do you want to give something back to the country? And this feels to me like the right time. Pakistan is on the cusp of, inshallah, achieving something it has never been able to achieve before and break out of the cycle of poverty that we've been stuck in. So maybe I'll leave it at that, Alina, and very, very much look forward to the question.
Thank you so much for that. I think that was something that we all really needed to hear, especially at this stage in our lives. So this was really great. And I think before we begin with the questions, I just want to briefly outline how we're going to go forward.
Alina, if I could jump in for 1 minute, I already saw on the chat message, we got the first interest for finding out how to apply to the state bank. So I wanted to ask, I think somebody from our office is on this call, Rana Akil, to please post the email address of the office of the governor so that all your participants have it. And I should also tell all your participants that Dr. Murtaza is also the deputy governor in charge of human resources. So he is the person who is going to clear and approve all the hiring decisions. So you have the right person from a recruitment perspective as well on this call.
That's great. I'm so glad that there's already so much interest being shown before we've even begun. So yeah, just moving forward, I want to kind of clarify how we're going to go forward. Our first questions are just going to be related to COVID and the state bank and the general economy. And then we'll talk a little bit more about external lending and the IMF, if that's all right. And then at the end, we'll take a few questions from the audience. So if you have any, as we continue, if you have any questions, just put them in the chat and then we can address them at the end, if that's all right. Okay, so I'm excited to start. The first, as just a brief overview, and this is directed to Dr. Bakir. So the COVID recession era that we're going through has been especially detrimental for emerging markets and developing economies. So what areas of life in, say, South Asia or the Middle East, economic life, I mean, have been the most affected by COVID?
Thank you, Alina. Let me begin by saying that in a way, like previous global crises, this crisis is also going to widen the inequality across countries and the extent of inequality within countries. Let me begin with the latter first. Even in countries like the United States, there has been plenty of discourse about how the economic impact of the COVID crisis has been particularly more on minorities. The most recent manifestation of that is now how the health function has disparities in it, whether in the rollout of vaccine or the death rates across different racial groups. There are startling differences. Similarly, in many other countries, the haves have it better than the have-nots, and that gulf gets accentuated during crises like this. That is painful to see for anybody who is in a role as a public policy maker. Now, it is also going to widen the disparities across countries. And the reasons are generally straightforward because the global economy is also divided between the haves and the have-nots. And one way of making this division is that the haves are those countries that have global reserve currencies, such as the dollar or the pound or the euro or the yen or the Chinese renminbi and others. And the reason this gives them a lot of firepower to deal with the crisis is that their assets denominated in their currencies will generally always be in demand. And so these countries can afford to give a lot of stimulus to cushion the impact of COVID without worrying about whether investors will lose confidence in the ability of these countries to pay back the debt that they are accumulating to give that stimulus. The have-nots are countries that emerging markets, many others, who are trying to climb up that ladder of the world economic ranking. And when these countries try to give a stimulus that is large, investors eventually begin to question if these countries are going to have the institutions and the right policies and the resources to be able to pay back the borrowers from whom these governments are borrowing. On the monetary policy side, some of these countries may struggle with the history of central banks that may have had credibility problems. And therefore, questions can arise whether those countries, especially that are gaining credibility in monetary policy, if they suddenly give a very, very large monetary stimulus, are they going to be able to retain the buildup of credibility that they had done before? So these countries are constrained, and therefore you will see that the amount of stimulus that is given by emerging markets is orders of magnitude less than that in advanced economies. To the extent that economic stimulus helps cushion the impact on people from COVID, which it does, you will find that the fall in income in advanced economies will be less due to COVID than in developing countries and emerging markets. Now, this is the way the world is, and this is not and should not be a surprise to anybody who's a reasonably astute observer of world economic history. The onus is on us as policymakers of developing countries to embrace this as a challenge and to find ways of being able to respond innovatively to the challenges that we face while respecting these constraints. And when we get to talk about how Pakistan responded to COVID, Dr. Murtaza will share with you how we went about doing that, how we went about, on the one hand, not losing credibility in international markets, yet at the same time giving a very aggressive response. And the fact that today a lot of the economic indicators of Pakistan are rebounding in a very healthy manner. For instance, sales of cars last month grew 44% year on year, which is one of the highest rates of growth. Our manufacturing index, latest print on that is more than 11% year on year. One of the key reasons Pakistan is being able to bounce back from the deep hole of COVID is the way in which we innovated. And I hope that we'll have some time to get into the details of that, and Dr. Murtaza will be able to share that with you.
Right. Thank you so much, Dr. Murtaza. If you'd like to just continue on that and maybe talk a little bit about the state bank's policies that have been geared at tackling COVID before I ask a more specific central bank policy question.
Sure. Thank you, Alina. Just to sort of build on what the governor said. Last March in Pakistan, when first cases of COVID were getting reported, we had just begun to come out of what was already the deepest economic crisis that Pakistan had faced in its history. We had had current account deficits that were in the order of $22, $23 billion. We had had fiscal deficits that were in the order of 7 to 8% of GDP for a number of years. And we had had to take some very, very tough stabilization measures to get those things under control. And this was not something that was unique to Pakistan. I mean, if any country faces this kind of economic situation, it needs to stabilize its economy first and then look towards growth. So to stabilize the economy, we had taken a number of very important steps on the eve of the corona crisis. We had, for the first time in Pakistan, moved from having a fixed exchange rate and an obsession with keeping the exchange rate overvalued to a flexible exchange rate system. And that system was helping us redress the current account imbalance that had gotten us into trouble in the first place. I want to spend a minute on this exchange rate issue because I think it is kind of ironic. Most countries that are looking to grow fast, all the Asian success stories that we have from the last 30, 40 years, their success was built on an exchange rate that was undervalued. You kept the value of your exchange rate low, you were able to export more, import less, and that's the way you grew. In Pakistan, we were obsessed in the other direction. We were obsessed with keeping our exchange rate stronger than it deserved to be. and that really hurt our export sector for a long, long time, caused us to consume much more than we should have, and created this current account problem. So the way to address that was to go to a flexible exchange rate system, which would mean that in the future, current account imbalances would get redressed automatically through the exchange rate rather than having to burn our reserves. That's the first thing that we had done at the State Bank, which is a very, very big reform. I'm talking about pre-corona right now because that is an important part of the story going forward as well. The second thing that we did at the State Bank, which was also very, very brave, was to say that we would no longer be providing any financing to the government from the State Bank. That tends to be highly inflationary. You have to print money to be able to fund the budget deficit. And by doing that, you free the government of any budget constraints, but in a way that actually hurts the economy much more because you create inflation, and inflation has very, very adverse consequences. So we stopped doing that in the lead up to Corona. That was also a big decision that we had taken. On the government side, there were a lot of reforms that were being done to increase the tax to GDP ratio, which in Pakistan is abysmally low. Only very, very few countries in the world have a lower tax to GDP ratio than Pakistan has. So our two primal problems, the fiscal deficit and the current account deficit, were something that we had begun to really get a grip on in the period leading up to Corona. And the economy was beginning to recover. Then came Corona. This shock that, as the governor was saying, was going to be tough for any emerging market to withstand. But you must remember that Pakistan was an emerging market that had been in a deep crisis only 9 months before Corona hit. So for us, it was an even more difficult situation. And the first thing that, of course, as you asked in your question, we had to think about was the health situation. The second was obviously lives that were at stake. And the third was businesses and employment, because these three things together were going to determine the future path that the country was going to go on. So very quickly at the State Bank, we had to adjust gears, move away from stabilization towards trying to provide stimulus to the economy. And we were able to do that successfully because we had built up a lot of credibility in the months preceding the Corona crisis. We were able to bring the fiscal deficit under control on the Ministry of Finance side. We were able to bring the current account under control, and we had a very successful transition to a flexible exchange rate regime. I think probably one of the most successful transitions that I have been witness to. And I've seen many transitions during my time in the fund. So has the governor. This was a remarkably successful one. We built reserves through that transition. The exchange rate appreciated through that transition. That doesn't happen very often. So having built all those buffers, we were able to then provide the stimulus that the economy needed. On the government side, on the fiscal side, the focus was on, I would say, the flagship thing that the government did, and for which it deserves a lot of credit, was the SARS program, which was directed towards the most disadvantaged people in Pakistan, providing cash transfers to 15 million households, about 40% of the population, because this population was highly at risk. They were already living on the edge of poverty, and this shock was going to take them below the poverty line. So that was a big focus of the fiscal. And the fiscal did not have a lot of room either, because public debt in Pakistan is very high now. Unfortunately, it's close to 85-90% of GDP, which is very high compared to other emerging markets. And therefore, it had to use its ammunition very carefully. And the government was able to, I think, really provide a lot of support to the people that needed it most in the wake of Corona. At the State Bank, we did a few things that we had never done before. We brought the interest rate down very fast. In a matter of 3 months, we brought it down by 625 basis points. This was the second largest cut across the world. Only Argentina had a bigger cut, but Argentina has some very peculiar circumstances with hyperinflation and a debt crisis going on. Ours was the second largest cut across all the emerging markets across all the world. We also had to do things that we had never done before. We had emergency meetings of the Monetary Policy Committee. We were almost having a meeting every 2 weeks because the situation was evolving so fast. So first thing we did was bring the interest rate down. That provided a lot of relief in terms of interest payments and principal payments to businesses and households that had borrowed from banks. So that allowed them to cushion this liquidity shock that they were hit with, because Corona was nothing to do with fundamentals, right? The fundamentals of the economy were still what they had been before, but you suddenly had this external shock that provided this liquidity shock that you had to absorb as the government and at the state bank. So we were able to do that on the interest rate side. But in addition to that, we looked at what other countries were doing. We couldn't quite do exactly what the advanced economies were doing, which is printing a lot of money and just pumping that into their economies, because we were not a reserve currency issuer, as the governor said. But within the constraints that we had, we were able to impart a stimulus worth 5% of GDP into the economy. And we basically focused it on three things. First, the health crisis. We provided cheap financing through the banks to hospitals so that they could fight COVID. They could import equipment, they could build out their infrastructure, and that helped on the health side. And as you know, Pakistan has been remarkably successful in terms of combating COVID. And a lot of the, I think, credit goes both to the people, but also to the government and some of the initiatives, I think, that were taken, such as the ones that we did to help contain the immediate health crisis. So we were able to flatten the COVID curve quite quickly in Pakistan. The first wave we dealt with very successfully. And, partly, as I said, it was because the state bank also helped provide some financing to the health sector. The other thing we did was aimed at protecting jobs. And there what we did was we provided cheap financing again through banks to those businesses that committed not to laying off any workers for 3 months. And then we extended that to 6 months as well. So we provided quite a lot of stimulus, protected jobs. About 2 million jobs were protected, and mostly in small and medium enterprises. It wasn't just the large players that we were targeting. The third thing that we did was we provided this temporary liquidity relief, both by bringing the interest rate down, but also changing the regulations so that some businesses that were having trouble paying back interest or principal on their loans purely because of this shock, not because they were insolvent in any way. We gave them additional time to do that. And I think through these kinds of policy interventions, which we had never done before and really required us to think out of the box, we were able to withstand the first wave of Corona quite well. Right now, the economy is in a recovery phase, as the governor said. We are seeing the economy picking up quite strongly. Cement sales are at all-time highs. Auto sales are doing very well. Large-scale manufacturing is doing very well. And there is a wave of optimism right now in Pakistan about both industrialization and also where exports could go from here. And exports really have to start picking up for Pakistan to break away from its previous cycles of current account deficits and getting into trouble and having to go to the IMF.
Right. I think that was a really nice and comprehensive sort of elaboration on the kind of fiscal and monetary tools that you used pre-COVID and also during COVID to find innovative solutions to existing problems within the central bank and the economy, and then the ones that were accelerated due to COVID.
Reena, if I can stop you for 1 second, I just wanted to round off the set of measures that Dr. Murtaza was saying by adding just one quick comment.
Yes.
That from the very start of the crisis, one message that I had wanted to convey down the institution was that State Bank had to think of new ways to respond to the crisis. And the message that Dr. Murtaza and I were giving earlier about how there are changes afoot in this institution, the State Bank, as well as in the broader country. These responses are an example of that, because as COVID spread and as the country entered lockdowns and as people began to panic, we in the State Bank and the senior leadership, a good maybe 8-10 of us, were having nonstop Zoom meetings where I had given the instructions that you have to go and think of something new. Don't be afraid that it might not work. Don't be afraid that it may not survive the scrutiny from amongst all of us. But COVID is a crisis that has not been witnessed before, and therefore we have to respond in ways that we may not have thought of before. So all these responses, many of these which have come about, which were never done in the history before, was because we were trying to get this message down the institution that we have to think of new ways, we have to innovate. And therefore, these measures that our deputy governor shared with you are all things never really done in the history of Pakistan before. And if you compare our response to this crisis versus, say, the financial crisis after Lehman Brothers, you will find that the state bank was a lot more aggressive this time and used a lot newer set of instruments than had not been used before.
Right. I think one of the biggest criticisms of the response to the 2008 financial crisis was that central banks were bailing out institutions and bigger banks with asset buyback plans. And this obviously was a very unequal policy, and it was greatly criticized afterwards. It seems that your response during the COVID crisis has more of a trickle-down effect, and it targets institutions as well as individuals. So there is a lot to say for the sort of innovative approach that you took towards handling COVID. So yeah, I think it is a really important point to emphasize that it's a new sort of crisis, and the level of kind of out of the box thinking that went into tackling this crisis certainly helped the responses to the crisis be a little more inclusionary than perhaps the responses to the 2008 crisis. I just want to touch on something that you mentioned earlier, Dr. Saeed, and maybe Dr. Baki, you can talk a little bit about this. The central bank seems to be in favor of maintaining a negative real interest rate, it seems, to tackle deflationary pressures. However, instead of spurring aggregate demand, this policy seems to be creating asset price bubbles, which we know are liable to burst, as they have in the past, which can send a spillover shock into the economy. Dr. Bakir, what are your views on this monetary policy, and how likely do you think this sort of burst is?
Thank you. I want to put your question in context that, as our Deputy Governor Murtaza Saeed was saying, before COVID struck, we had real interest rates that were slightly, moderately positive. And nominal interest rates were quite high, around 13.25%. State bank then was not popular because we had to really embark on a policy to stabilize the economy. When COVID came, and with the deep recession that ensued, and nearly the largest recession since Pakistan's independence, it was appropriate that interest rates had to be cut very aggressively. Now, the trade-off that emerging markets face that have a market-based exchange rate, as we had adopted 9 months before COVID, was that if you cut rates very aggressively, you shouldn't let your exchange rate get out of hand. There are lots of examples of countries where if they cut rates too much too quickly, exchange rate falls and causes a lot of instability. So we were able to cut our interest rates, one of the largest cuts across the emerging market space, even with those countries that started off with double-digit policy rates. Yet our exchange rate, from the strongest to the weakest, only depreciated about 8-9%, which is well right in the middle of the range of all emerging markets depreciation. So think about it, largest rate cut, but exchange rate depreciation in the middle of the pack of emerging markets. And now, in fact, the exchange rate, as you might know, has been strengthening. Now, coming specifically to the question of asset price bubbles. Pakistan is an economy where, when you think of asset prices, stock market ownership across the population is very, very limited. The broader story of Pakistan is that because of the previous couple of years of stabilization, the economy had really been subjected to some tough measures. And now with the liquidity that we have introduced, it is climbing out of that hole from COVID. We are not out yet. And until we are firmly out, it is our role to provide that comfort to the investors that we are going to give this supportive environment. For the economists amongst you, by our estimates, our output gap is still negative. We don't see any demand side pressures on inflation right now. And therefore, as we articulated in the most recent monetary policy statement, we see that the appropriate stance is to support the recovery. And in our last monetary policy statement, we went one step further and gave forward guidance to give comfort to investors that in the near term and in the absence of any unforeseen developments, we were expecting monetary policy settings to remain unchanged. So asset prices is something to keep an eye on. But Pakistan is not an economy where ownership of financial assets is so widespread to worry as much as one would in another country where it is more widespread. There is one caveat to what I'm saying, and that has to do with real estate, because real estate prices are correlated with interest rates. And together with lower interest rates, as well as the emphasis of the government, which the State Bank is supporting, to promote housing and construction, and to promote housing and construction finance, and including low-income housing, which is something very exciting happening that I can talk about. And more broadly, I'd be happy if there is some space to talk about our recent initiatives on financial inclusion, including for women, that I think would many in your audience might find it interesting to hear about. Because of this work on housing and construction finance, real estate prices are rising. And that is something that one is keeping an eye on, but it's not right now the same kind of situation where you have a situation where there is a lot of leverage underlying those asset prices. Crises related to asset prices really magnify when there is underlying leverage from banks. And in Pakistan, historically, banks have been extremely conservative. Our loans to GDP ratio is amongst the lowest in the peers. And the meaning of this is that even if asset prices collapse, they don't have a multiplier effect, or they don't lead to collapse of financial institutions because there was leveraged investments in asset prices.
Right. I think if you would like, we would like to hear a little bit more about these programs that you mentioned for inclusion and women. Just maybe briefly talk about them before I ask my final question related to COVID.
So I told you the first hiring decision that I made was Dr. Murtaza Sayyed. The second hiring decision that I made was to hire an outstanding banker from the private sector, Seema Kamil, who was the president and CEO of UBL, one of the largest private banks, and a woman, and for the first time, I believe, in the history of the State Bank, a woman deputy governor. And I noticed also in your audience today, there are many women who are joining this call today as well. And I wanted to bring your attention to a strategy that we've just unveiled called Banking on Equality. And it's a strategy that is up for consultation on our website. And it lays out a roadmap for how we want to promote the inclusion of women in our financial sector. Currently, we score quite poorly on that metric, whether you measure it by the number of accounts that are owned by women and are active, or you measure by the number of loans that are given to women, or any other metric. And we, as a regulator of the financial sector, have the space, at least within the financial sector, to promote the empowerment and the financial inclusion of women. So I really urge you to take a look at that. We have provided also an email address where we welcome feedback. And we're doing a series of high-level consultations to get feedback on this strategy. One example of this is, for instance, to require that financial institutions will have 20% of their employees that are women by a certain date. Similarly, that banks are going to be required to come up with financial products that are geared towards meeting the needs of women entrepreneurs or women businesswomen or women in general. Not like simply having pink checkbooks, which many banks do and check off that they have done something for financial inclusion of women, but something that is based upon research of their own teams to serve better the needs of women in the country. So I really encourage you. This work and our broader agenda on inclusion is being led by our Deputy Governor, Seema Kamil, and also State Bank also is holding itself accountable to the 20% target of women. So I particularly also encourage the women who are from a financial or economics background to reach out to us and get to learn a little bit more about what we are doing. Another point on inclusion will relate to all of you as you are overseas Pakistanis, and that is our inclusion, financial inclusion of the diaspora of Pakistan. As another example of something new that we are doing, we launched what is called Roshan Digital Accounts. And for the first time in the history, Alina, we have made it possible that people like yourself, others who are sitting abroad, can open accounts in Pakistani banks remotely in a presence-less manner, not having to visit any bank office or any consulate, or not having to attest any documents, but through a few mouse clicks to be able to have a fully functional bank account, allowing you to do all kinds, the full needs, lifestyle banking needs that you would get otherwise, and all through mouse clicks. Dr. Murtaza is leading this effort, and we've had a tremendous response to this and a long way to go. So that's another example of financial inclusion of the diaspora, again, something that hasn't been done before. Another big agenda is the access to finance for SMEs, small and medium enterprises. And this is a huge challenge in Pakistan. Banks are very conservative. SMEs don't really want to come into the formal sector because of taxation and other reasons. And due to a combination of information asymmetries and other factors, we have one of the lowest ratios of SME credit in percent of GDP. And it's an area that we are working very actively on as well. And finally, I will mention again on the perspective of inclusion, we have launched Pakistan's instant payment system called RAST. RAST means the straight way, the direct way, and you can think of Rahe Rast. And like in the UK, you have a faster payment system where you can make transfers in seconds. Pakistan has introduced that same very system, which we also think is going to be a big step forward in our journey towards financial inclusion. So think of all of these things that I've mentioned we have done by way of inclusion in the last year and a half or so, and partly also taking advantage of COVID and coming up with new ways of using technology and digital platforms to get banking to permeate across sections of our society. Our banks have a lot more to do to help people take advantage of the products and opportunities offered by the financial system.
Right. I think it's so heartening and almost like refreshing to hear about all of these different innovative opportunities and plans that are being put in place by the central bank. And I think especially for like my generation, it's very encouraging for us to hear about these. So thank you very much for touching upon them. Dr. Murtaza, I have a little bit of a long question for you, if you don't mind. So as we know, this is our final question, COVID. The Pakistani economy, like other economies, has suffered in a multitude of ways due to the COVID crisis. So insolvency, unemployment, falls in consumption and investment. I want to look a little further into a specific aspect of this economic crisis, which is just how the effects of COVID on China's economy have spilled over onto our economy. And do you think there are any long-term causes or effects associated with economic dependency on China for Pakistan?
Thank you, Alina. On China, I will say that it has been one of the economies actually that has dealt with COVID in the strongest way possible. In fact, it was one of the few economies that actually grew last year. In 2020, most of the economies of the world, if not all, actually had negative growth rates. China was actually able to register positive growth in 2020. And heading into 2021, it actually is growing very, very fast. Its exports are picking up, but also its domestic demand is doing very well. Now, China has been confounding, I think, economic logic for the last 30, 40 years. I mean, there has been a lot of commentary on how the Chinese economic model was going to run out of steam sooner rather than later. People have been calling the end of the China story for many decades now, but have all been proved wrong. I think the Chinese economic system is obviously very peculiar. It has very heavy intervention from the state. It also has an orientation that is largely outward, but now because living standards in China are going up fast, domestic demand in China also is able to serve as a shock absorber whenever there's a shock to the global economy. So I think it is quite clear to me that now the Chinese economy is on a stage where it is going to be on a self-sustained path. There are some questions every now and again about whether there's too much debt in the Chinese system, whether their financial system is going to come under stress. But I think the leadership in China, one of the advantages of not being democracy actually is that you have a leadership that thinks many, many years ahead, almost decades ahead, and knows that their own economic survival or their own survival as a regime depends on economic growth and economic betterment. So you've actually got a cadre of economic managers and technocrats in China that understand the world, that understand their economy very well, have been experimenting with many things over the last many decades, and have, I think, hit upon a way of regulating their economy that actually works quite well. So I think actually the fact that China has been able to withstand the corona shock very strongly is good for Pakistan, because obviously a country in the region is doing quite well, and there are obviously going to be spillover impacts for Pakistan that are going to be quite beneficial. Right now, the flagship project that we have, of course, is CPEC, which is the China-Pakistan Economic Corridor, which is part of the Belt and Road Initiative that China has more globally. And the first phase is over. The first phase was all about sort of more or less infrastructure, roads, power generation, bridges. And now a very exciting second phase is beginning, which is going to be about special economic zones that China is going to help us set up so that our exports can start to rise. And I think if we can crack that particular problem, because Pakistan's exports to GDP ratio has been very low for a long, long time. We've never really been able to do justice to our export potential. And if China's help with their investment, with their know-how, with their experience of how to do this, if we can actually latch on that, I see a lot of benefits that we could have. And I think to your question about whether there are any risks associated with the relationship with China, I think this is a relationship that has a lot of potential actually to do wonderful things for the party, is already doing good things for us. The relationship with China is one that has withstood many, many, different tests over time. And it's a very, very long historical relationship, which persists no matter what the government is in Pakistan. And I think for us to capitalize on that relationship really would be one of the ways in which Pakistan can do justice to its potential as the fifth largest country in the world.
Right, I do agree that China is it's a complex model, and there's a lot to go into it with respect to economic growth and the sort of like the bilateral relationship that we have established at the moment. I'd now like to address a little bit of your roles in the IMF with respect to Pakistan now and the kind of experience that you gained. So since both of you have covered many emerging markets in Asia, Eastern Europe, and the Middle East, how would you compare Pakistan with other economies that you've seen and dealt with firsthand in terms of economic challenges and available solutions? I understand that this is a very broad question, so maybe each of you can focus on like one region that you've worked with before and how the kind of similarities you see in like problems that you've seen in those emerging markets and in Pakistan, and whether you feel like the solutions implemented there or that could be implemented are also feasible in Pakistan.
Maybe I'll start and then ask Deputy Governor Murtaza to step in. If you compare Pakistan simply on statistics to other emerging markets, you will see that the incidence of balance of payments crises is a lot more in Pakistan than in many other emerging markets. According to some metric, I think we've had to request IMF assistance more than 20 times. Now, that is quite high, and it begs the question, why is it that we repeatedly have these problems? There's a proximate answer to that, and the proximate answer to that is that one of the best predictors of having an IMF program is a sustained fall in reserves. And we seem to have not quite grasped that when reserves are falling, in part because of a currency that is not sustainable and is being maintained fixed, it is not going to fix itself. But somehow perhaps we forget what happened last time around, and we think that things will turn around, and they don't, and we end up going to the IMF with a very low level of reserves. It does beg the broader question, why is it that decisions like these are not made earlier? So for instance, the decision that was made now to float the currency was a decision that could have been made earlier, but it wasn't. Part of me thinks that it has to do with the fact that previous governments did not have the courage to make the decision, because floating a currency is not without its risks. If you remember the Thailand financial crisis, the baht, when it was floated, fell several orders of magnitude, and it really jarred people. Similarly, in Egypt, where in fact I was serving before coming to Pakistan, the currency, when they floated it, depreciated by more than 150% nearly overnight. So there were genuine fears that when you float a currency, it might get out of hand. You may not be able to control it, because after all, if you're making it market-based and the market just loses complete confidence, how do you stop a currency from free fall? But this government gave the space for the central bank to do so. And I think that with making this change permanent, we are going to now have this institutional change that will prevent the erosion of reserves going forward when we have balance of payments crises. And as long as we can maintain this commitment, I do believe that the manner in which we deal with balance of payments pressures is going to be decidedly different than it was in the past. The other thing I will mention is that in comparison with maybe other countries, and maybe I'll pick Egypt because I was there, there are some similarities, but there are also some differences. The similarities are, for instance, that typically, not just Egypt, many other countries that have a crisis, it has to do with twin deficits. As Deputy Governor mentioned, one is the current account deficit, and for those who are non-economists in your audience, current account is, in simple terms, the difference between your import and export bill, while also adding the remittances that you get from workers, roughly speaking. And current account deficits and fiscal deficits. These are usually the two causes of having a balance of payment crisis. In Egypt, if I talk about the currency, in Egypt, everything was left till the flotation, and therefore the currency jumped quite a lot. In Pakistan, over the course of several months, the currency was devalued in steps. And then when I joined the State Bank, we thought to try to bring it to a level where once we let it go, hopefully, after some initial volatility and after the market begins to figure out how to function in this new normal, it will become an orderly market. And so in Egypt, while there was a sudden jump overnight of 150%, if you look at our exchange rate from the previous regime where it was kept at 105 and then came to about 162 when we floated it, this roughly 50% depreciation took place over several months. And that's one difference between the two countries in terms of how the situation was dealt with. Neither may be better or worse, but it's simply pointing out some of the differences that we've had. I'll stop here and maybe Deputy Governor Murtaza would like to add.
Yes, thank you, Governor Saab. I think in addition to the sort of macro stability conditions that you need for any economy to sort of do well, and there, of course, you need to manage your fiscal finances and your exchange rate, monetary policy well. The countries that I have studied most closely are the Asian countries. And, you know, since the 60s, 70s, 80s, there have been a variety of Asian countries that have actually done quite well. And if you look at kind of some of what the ingredients were in order for them to start growing like that, there are a few things that I think Pakistan could learn from. But of course, Pakistan has its own specificities as well. One is, I think, investment in human capital. All of the countries that tend to do well have a very good system of public education, healthcare. So they're investing a lot in the human capital of their populations. Pakistan has been underinvesting in both these areas for many decades now. I think that is something that we need to get right if we want to grow sustainably. The other is a reliance on exports. Really, if you are looking to grow fast, the best way to do that is to get rid of your domestic constraints. Your domestic market typically tends to be quite limiting at initial levels of development because there's not enough of a domestic market. So you have to really look outside to be able to grow without the domestic constraints. So in Pakistan's case, as I was saying at the beginning, perversely, we had an obsession with keeping the exchange rate overvalued. These other countries did the opposite. They kept their exchange rates undervalued. That helped them export more and substitute imports. So I think that is something that hopefully now, with our exchange rate being market determined, we have taken care of. But then there are other things that, of course, determine exports, which are out of the state bank's hands. The business environment, the cost of electricity, the cost of labor. That's not something that state bank can really directly affect. But exports, human capital, and I think in more cases than not, having a very high rate of savings also helps because it means you don't have to rely on the outside world for savings. So in China's case, for example, their savings rate is about 40% of GDP. In Pakistan, it is 13, 14% of GDP. So about a third of the level in China. If you don't have your own savings, then of course you've got to attract savings from outside. That's really the only way that you can invest. That's the only way you can grow. In Pakistan's case, that has also not been a very stable source of flows. We are trying to change that. We are trying to get more remittances coming into Pakistan. We are trying to do this Roshan Digital Account initiative through which capital will come as well. We're also trying to diversify, get FDI, get foreign portfolio inflows as well. But unless we have this, unless we have very high rate of savings or some way to fund ourselves by relying on external capital, you know, the way for Pakistan to grow will always remain a little bit cloying. We won't really be able to, I think, take off. So in terms of the Asian experience, at least, these three things, human capital, exports, savings, seems to be something that I think is missing in Pakistan, but hopefully we are beginning to address these very long-standing issues.
Right, I think that was a well sort of comprehensive overview, and thank you so much for your input there. Just drawing on this, can we move to sort of discuss the short-term and long-term effects of external borrowing from the IMF on three areas of the economy? So if Dr. Bakr, you could maybe address deficit and external imbalances due to external borrowing. And if Dr. Said, you could address economic growth and employment and how these are affected by IMF borrowing.
Sure. So it's useful to take a step back and to think about why and how does the IMF lend?
Yes.
And by its articles of agreement, the IMF cannot lend unless two conditions are met. One is that the money is going to be given only if the country authorities have been able to put together a set of policies that address the underlying balance of payments problem for which the country came to the IMF. Okay, that's condition number one. Condition number two is that there have to be good prospects for the IMF to be repaid. Okay. Otherwise, as the lender of last resort, whether it's IMF or any other institution, it cannot lend because the global financial architecture would not work if that guarantee is not there, that most senior preferred creditor status is not there. What this means is simply that because the IMF is lending hard currency, the debtor country needs to be able to generate enough of a turnaround in its external balances, current account deficits, and more broadly, the balance of payments, that it will be able to repay the IMF and address the underlying causes of its problems. Now, the traditional model of IMF lending is that it catalyzes capital from the private sector to come into the country. Because typically what happens in the run-up to the IMF program is that other creditors slowly begin to say no to the country. And a country only goes to the IMF as the lender of last resort. The traditional model or the textbook model or the theoretical model is that the IMF, once it steps in and gives that signal of the seal of good housekeeping, acts as a catalyst to restart capital flow from the private sector and other bilateral official creditors and other multilateral official creditors such as the World Bank, ADB, and others. And that inflow generates then the surplus and allows the IMF to be repaid. In Pakistan's case, it's very important to note that one of the reasons we are very optimistic about this IMF program, at least on the external side, is that a lot of the external adjustment had already been completed before the IMF program started. Whereas in many other IMF programs, the external adjustment, meaning the reduction of the current account deficit, happens after the beginning of the program. Now, the adjustment of the current account, as Dr. Murtuza said, doing it through an exchange rate being made market-based, is obviously a change in relative prices. And a previous system of relative prices has those who benefited from it and those interest groups that were interested to preserve it. These are largely importers and others who stand to lose once an exchange rate is depreciated. So they complain. And the adjustment is difficult because as the exchange rate is brought to a sustainable level, it is going to have a pass-through impact on inflation and prices as well. But I want to go back to the point I made earlier, that if the previous regime was sustainable, there would have been no reason to change it. But it was not. And the decisions that were needed to fix it were difficult decisions. And previously, there was not the boldness to be able to grab this problem head on. Now that it was done, initially there was the difficult adjustment. But now, and especially because of the responses given during COVID, the economy is coming up. The other part of your question was the fiscal deficit. There is a lot of analogy between the current account and the fiscal side, which is simply that if one is not able to generate enough receipts to manage one's expenses, one is simply going to have to issue debt. And debt is a burden on future generations, besides posing the risk that after a while, the debt itself may become unsustainable. And therefore, the IMF demand to reduce the deficits is one of the ways to try to get a handle on the growing debt problem. And therefore, invariably, you will see that IMF programs come about with a improvement in the current account balance and an improvement in the fiscal deficit, both of which were the causes of going to the IMF, hence the first condition being met of policies that are addressing the gaps, the holes that led the country to seek the IMF. And second, with both improving, the country having more resources to pay the IMF, which is the second condition that the IMF has to lend.
Thank you so much. Dr. Said, do you want to just briefly touch upon maybe economic growth and employment in the same context?
Yeah, thank you, Alina. I think just building on what the governor said, you have to remember that the reason a country comes to the IMF is because it has somehow mismanaged or been hit by a shock, right? Either it's been running some kind of unsustainable policies, or it has come to the IMF because not really of its own doing, but it has been hit by an external shock. And the IMF has a very different attitude depending on why it is you have approached it. If you've genuinely been hit by an exogenous shock, then the orientation that the IMF has is mostly to provide you liquidity. And they have different lines through which they can do that. And that usually doesn't carry so much conditionality. It is more about tiding over that shock because it really has nothing to do with the fundamentals of that country. A bit like what we did during COVID, as I was saying at the beginning, when there were some businesses that were fundamentally solvent, but had been hit by this external shock through no fault of their own. So in those cases, the IMF tends to have a much more lenient attitude. All it's trying to do is to make sure that you can get through this temporary phase and then go back to running your economy the way you were. Unfortunately, when Pakistan has been going to the IMF, it has not been because of cases like this. When we got some assistance because of Corona last year, that was one of those instances. So we got the money with almost no conditions, in fact, no conditions attached, right? Because that was a genuine exogenous shock. But all the other times that Pakistan has gone to the IMF, it's basically because we have unfortunately been running unsustainable policies. What does that mean? It means that either our current account deficit became too large because we had a consumption boom, which we weren't able to finance, our reserves sort of came down, or unfortunately, as is happening now, our public debt is rising very, very fast, and we are no longer able to generate enough financing for the budget. In those cases, when you come to the IMF, you must remember that your back is against the wall. No one else is willing to lend to you. If the IMF were not there to help you, you must remember that the counterfactual that you would have is a much worse situation than perhaps people imagine. When you look at the first year of the IMF program until the COVID crisis hit, yes, we had to go through a very difficult stabilization phase. We had to bring growth rate down, but that was because we had no choice. The previous growth that we had was unsustainable. It was consumption-led, it was requiring us to import a lot, and it was requiring us to deplete our reserves. So basically, no country comes to the IMF because they want to. It would be much better if you could avoid having to go to the IMF and be self-reliant. There is no doubt about that. But at the same time, if there was no IMF, that would also be a very bad situation for countries. Because if you have mismanaged your economy or you've been hit by an external shock, who would you turn to in those circumstances? And you must remember, of course, that the IMF is made up of all the member countries in the world. And therefore, I think sometimes people have this sense that there is some kind of conspiracy against developing countries that these international financial institutions have. Having worked there, I can tell you that the staff has very high levels of integrity and really wants to do the right thing. Unfortunately, when you have been running an unsustainable macroeconomic policy mix, it does mean you have to stabilize your economy. It means typically growth has to come down from where it was before because that was unsustainable. And typically, of course, that also means that unemployment does increase in the country. But you must remember that the counterfactual would have been a lot worse in the absence of having the IMF come in as a lender of last resort. The more interesting question, though, is what happens 2 or 3 years into an IMF program, or once you've exited the IMF program? Have you been able to do the kind of structural reforms that actually put you on a path of sustainable growth? The countries that actually make use of the IMF program and are able to pass difficult reforms that sometimes require, difficult political choices that would not be possible if you were not in an IMF program. Sometimes actually the IMF program allows you to do things that are otherwise politically very difficult. If you can do those right things, improve the business climate, improve the climate for the private sector, increase exports through some of the reforms that an IMF program typically entails, then you can see your economy start to take off after a couple of years, 3 years, have a much more sustained growth rate. We believe that this time our engagement with the IMF involves some very fundamental institutional reforms that will hopefully allow us to break free from this constant boom bust cycle and this repeated need to go to the IMF.
Right. Thank you so much. I think I agree with the IMF. It is important to evaluate your short-term and long-term effects separately and look at it more in perspective. So thank you for that. I'm just gonna, because we're coming to the end of our time, I'm gonna just end with a final sort of question from my side, which is just, I guess, addressed at both of you governors. So Dr. Bakr, what do you think keeps investor confidence low in Pakistan, and what sort of reformation or structure initiatives can be used to stimulate more foreign direct investment in terms of structural reforms or any definitive steps that we can take to boost investor confidence? And Dr. Saeed, do you think a lack of information or maybe uncertainty about Pakistan's capital markets or Pakistan's economic climate is an ongoing issue in the area of in sort of the discussion about investment? Yes.
Maybe I'll request Deputy Governor Murza to go first, and then I can come in, and then after that we can close the session as well.
Sure, thank you, Governor. Alina, of course, uncertainty, no matter what its roots, if it's related to policy, to the political system, to other sources of uncertainty, it's always bad for the investment climate. So to the extent that you can actually give confidence to investors that the regime is not going to change just because you're going to have political transition, or that you are committed to having a certain environment in place, that helps investors make long-term decisions. And of course, we would much rather have investment that is of a long-term nature. At the same time, there's always going to be room, and there should be, any emerging market also relies on shorter term flows of capital. You shouldn't rely on them too much, but not relying on them at all is also not a good strategy. So you've always got to sort of think about what are the different kinds of investors that you're dealing with. The shorter term investors, the ones who are sending, let's say, portfolio flows, they are much more interested, obviously, in a shorter time horizon, typically. They want to see good returns. They want to see interest rates that are attractive. They want to see an exchange rate environment that is stable. That is kind of what they're looking for. And I think that with this transition that we have been able to make at the State Bank towards a flexible and market determined exchange rate, with reserves being much higher now than they were a year ago, was double the level that they were in the summer of 2019. That is giving more confidence, of course, to investors across the spectrum, not just the shorter term investors, but also the longer term investors, the ones who want to send FDI. Now, there are, of course, other things that need to happen to bring that uncertainty down. There needs to be policy credibility. The central bank in particular needs to be seen as being modern in its orientation, able to communicate well, have a set of technocrats that is able to stand up and be independent. And I think there too, there are institutional reforms afoot that will help cement what is already a very good legacy under Governor Bakr. I think we are already being seen as having made a lot of strides. We're no longer the old central bank that never used to talk to anyone. We are much more confident about projecting what it is we are doing and asserting our independence. And for the callers here, I would encourage you to look at our monetary policy statements recently, to look at our website. We've been trying to revamp it. Give us suggestions if you think there are things that we can do there too. And also look at our reports on the Pakistani economy. I think you learned a lot. Some of the questions that you're asking, we've done a lot of research on. And I think you will see, hopefully you will find that the way that we're writing the reports is also becoming more modern. So I think, the policy credibility that comes with having an independent state bank, having a state bank that is able to communicate in a modern way, helps a lot with investors as well. And the governor and I, we've been involved in many roadshows We've been doing them virtually now because of COVID, but we often try to tell the Pakistan story to a wider set of investors that happen to be outside Pakistan. There's both the domestic audience, where you need a slightly different sort of communication strategy, but then there's the external audience, which is used to a much more advanced kind of discourse, because they're able to send their capital in different places, and they have to decide whether Pakistan is a good story. And I think, with the governor there and with the hires that he has made, he spoke about, Deputy Governor Seema Kamil, and hopefully some of the callers on this call can also be inspired to apply to the State Bank. I think we are turning the corner in terms of being seen as a much more serious emerging market central bank, one that has that is informed by good economic analysis and is able to communicate. And I think that will help us in terms of trying to get the kind of foreign investment that you have in mind.
I hope everybody is as inspired and as excited as I am after listening to our Deputy Governor. And I will only add that as far as investors are concerned, I think there are, of course, many things, but two always stand out to me to be quite important. One is that they want some reasonable assurance about sustainability, that the key macro indicators are heading in the right direction, and both institutional and changes as well as monthly outcomes of data are such that are consistent with the talk that they are hearing from the policymakers. And I think what you're seeing is that in the Pakistan's monthly indicators, slowly each month people begin to see that reserves are not falling, they are rising. They have nearly doubled since we started the program. Liabilities are falling, economic indicators are improving, and some institutional changes have been made, like the exchange rate regime, as well as others. Hopefully people will note that institutions themselves, like the State Bank, are changing as well. All of these things, Alina, I think, go towards giving a sense of sustainability in policy, so that any investor who's going to put down equity wants to be assured that conditions are not going to get worse. I think the second thing that investors look for is for the government and the public sector to get out of their way and to not change the rules of the game halfway through, and to not burden the system with licensing and other requirements. And you will see that some of the most exciting changes come about in areas which habitually were not regulated, and where there was very little, say, licensing requirement or other such requirements. You can broadly group this under the category of ease of doing business or the investment climate. But in a very simple way, often governments in countries like Pakistan overreach. And when that overreach happens, it tends to scare away investors, because they are the ones who have an idea, they are the entrepreneurs, they want a stable, sustainable, clearly articulated rules of the game system. Then let them do their business. Let's get out of their way. Let's support with a good environment of sustainability and let them flourish. It's their business to innovate. It's their business to generate value. Now, I wanted to just say a couple of other different things as we are ending. I wanted to say one thing, that I was looking at some of the questions in the chat box. And I also noticed you have a few people from Aitchison College, which is my alma mater. So I wanted to give a shout out to my old school, and to particularly happy to see some students from there. And some of the questions also revealed to me that a lot of this information is not somehow making its way to the intended audience. For instance, there's a question about Roshan digital accounts and how do we find out more about it. And I really wanted to encourage everybody on this call to check out our website, particularly for areas, the new things that we have done, such as Roshan digital accounts, such as banking on equality, such as a few other, our response during COVID, and you will get all of the information there. And second, I really wanted to make a plug to follow us on social media, and particularly on Twitter, because we have been using that very actively to try to communicate about all the different initiatives, policies that we are doing. Any event that takes place, we always tweet about it. And in this day and age of hyper media frenzy and secondary sources adding mirchi and masala to otherwise, fairly economic type news, there's a lot of value from hearing directly from the primary source and reading the whatever has been released by the state bank directly. If you follow us on Twitter, you will be sure to get that information, including about Roshan Digital and Roshan Digital accounts, including about our efforts in financial inclusion, including about our efforts on the response we gave on COVID. So really want to encourage everybody to please check us out on social media and on our website. And I really want to thank you, Alina, for putting this session together. It's a real privilege to be addressing some of Pakistan's brightest students, because if you were smart enough to get into Oxford, you certainly are in the very, very top of the distribution of talent of Pakistan. You made a great achievement reaching where you are, and we hope that some of you will partner with us as well in the journey that some of us have embarked upon in Pakistan by leaving our careers abroad and coming back to do our part to generate the turnaround in the country that we think is coming. And we need to create momentum towards this. So do join us in that.
Thank you so much, Dr. Bakir and Dr. Said, both of you. This has been such an informative session, I think, for our Pakistani audience, but also I've been noticing we've had some non-Pakistanis also come in and comment. And the feedback I'm getting is incredibly positive. So thank you so much. I think we've touched on so many different things that we can, go back and reflect on. And more than that, I think this has been an exceptionally encouraging session to see where the state bank is heading, where the Pakistani economy is heading, and to hear about all of these wonderful initiatives that we have in place. I, for one, feel very inspired, but also I'm encouraged to go back and look more into the state bank and its initiatives and Pakistan a little bit more, but also to see some of your internship opportunities and other things that I can personally do to help give back. I think that's something that all of us do at some point intend to do. And I think it's sessions like this and conversations like this are really what motivate us to look up to people like you and then do our part. So thank you so very much, Dr. Said and Dr. Bakir. And I want to thank everyone who's remained. I realize that we've overrun quite a bit, but I just want to thank everyone who's come and been witness to this. And yeah, thank you very much.
Thank you.
Thank you very much, Alina. Look forward to the next time.
Yeah.
Take care. Thank you so much. Cheers. Bye.